Will the markets go high in July, or should you be worried? We're going to talk about that in this video. I am Dr. Stock, Doctor of Education, and if you want to measure the efficiency with which an eagle flies, you can measure it using miles per talon. All right, it's good to be back in the saddle after finishing up the family vacay at the beach, followed by celebrating the first birthday of my daughter, having friends and family in town for that. And the house got absolutely wrecked with just supplies and preparation. Finally got it all reset, and I'm glad to be back into YouTube here. So let me pop up this article about why the market could go higher in July, because it shares some interesting statistics for us that I think we should be paying attention to. And then we'll get into the technical analysis on the charts for where we might find a little bit of worry to come in, for where we could possibly potentially turn around from where we're at right now in the markets. Then I'll also give some updates on some other stocks, Nvidia, Enphase, Tesla, and then also a few more stocks that I think, as a bonus, I'll share them at the end, that could have some incredible value when they're finished selling off. So why the stock market could surge 4% to record highs by the end of July. So we find out here, the bank highlighted that NASDAQ 100 has been positive for in July for 16 years straight. And then that's coming from Goldman Sachs. So first, about, instead of NDX, which is just the NASDAQ 100 right here, if history is a guide, the S&P could surge 4% next month. So that's July as of the time of this recording. And then if we go down below that, they also talk about the NASDAQ. Go down below this chart that we have right here. And there we go. These stats are staggering for NDX for the past 16 years. Positive July's average return of 4.64%. So how does that match up with the technicals that we have in the charts? Well, let me put up what I've been cooking up here for you. And these were created prior to reading this article. And we'll see if what they say matches up. So let me pop that up there. So what we're looking at right now is SPY. So this tracks the S&P 500. And we're looking at the monthly chart right now. And if we go out to whatever would be the next candle over and see how it matches up with this trend line that I have across the top, that means that we pop over this trend line, which is very long historical resistance for us, going all the way back to December 2009. So we also peaked out at it in December of 21 and now June of 24, but we don't know that this is a peak yet. I just want to point that out there. But if we do in July for that month, that puts us at 564. And what they say in the article is about 566 would be about the equivalent of what we would have. So that would be pretty spot on as per the technicals that are here. Then what happens after those 2 weeks in July? Well, when we're at the top of this trend line here, this is a rising wedge pattern that, should we break out the bottom of this, that can be something that's bearish for us. So we want to be on the lookout for that should we happen to hit this. And again, we're looking at the monthly chart. A few of the things that I want to point out is that we're in a much larger rising wedge pattern going all the way back to the pandemic for this support line here. And if we sell off, we could possibly sell off down to about 486, which would be a heck of a fall if we happen to have a drawdown in the markets. But that doesn't mean it can happen anytime soon. This goes all the way out to March 2025 until we actually have the cross right here of these two. So we could continue up for a while. We do have some bearish divergence that, as the market carries on upward, these peaks are getting lower and lower on us, indicating that maybe we get that sell sometime soon. We just need to watch for it. And one other thing I want to share with you, you can see these little two vertical sticks that I have right here. This comes from the cup and handle pattern that was happening with the S&P. So you have the cup part of it right here. You have the handle part right there. And so the height of the cup from the bottom to, since it's asymmetric from this peak to that peak, you take the lower of the two of them. Then I copied and pasted this trend line that you have right here. And what that results in is that we peak out around 554. So that's about halfway from where we're at right now up to where we could peak out in July if history does happen to repeat itself. So that's something to take a look at. And what we could get out of corporate earnings could be that thing, and especially the forward guidance that they have if we hear a lot about consumer weakness. But we'll see if the federal government, if the current regime, the current admin that we have, lets the market tumble leading up to the election, which is something that actually keeps me a little bit more bullish on the markets as we have them right now, with some volatility in between now and election time, that is. And then after the election is over, well, then it's a done deal. We'll see what happens between then and then March, whenever we get to the point of this rising wedge pattern, and anything can happen during that time. So it's not a lot to really project out from here. To see what happens, we're going to have to follow the technicals as they play out. The Q is very much the same. Where do they peak out? They peak out at about 498, and right now we're about 480. So that would be about We'll just call it up to 500. So that's about 20. That's about 4% more that we could put on. Let's go to the monthly chart so that way we can see. And mind you, we have very similar technicals here. You can see this one's looking a little bit more like a channel, more so than what we had for the rising wedge pattern. Bullish channel would be a bullish thing. But mind you, that does include some sell-offs and some sideways trading if it does happen to keep moving up and to the right. We'll see on that one. But for July, July's performance would put us about 495. The technicals here from what we have from the cup and handle on the NASDAQ 100 put us at about 498. So 498, 495, pretty darn close again by two separate metrics. And then possibly, potentially, we see some softness happening after that. I think it's very much worth looking at. All right, so I want to jump over into some stocks at this point in time that I've been tracking that a lot has happened to since the time I last made a video, and it's time to really start cranking those out. So first, check out Enphase. And when we talk about barcoding, look at the monthly chart here, going all the way back to let me see, December of 23. So the last month of last year is where this barcoding started. So we're about 7 months sideways, trading in a range on Enphase. And where does that range go? That range goes from about 100, just north of about 101, and then it goes all the way up to about 138. And we actually have what looks on here, a bearish engulfing candle. We could potentially push down off of that over the next month. It could possibly be that July is not going to be a great month for solar. And something else that I think is very much worth looking at when we look at solar stocks such as Enphase, if we ever go over to TAN, which is an ETF for solar, we actually have that same barcode look here going on. Again, here's Enphase. Here's what we have for TAN, and you can see they're very similar charts, a little bit different on the peakiness of those charts, but still very, very similar. And so we have that same tracking going. We don't necessarily have that same bearish engulfing candle here, but it's pretty darn close as we look at it. And if we do happen to come down to the bottom of this and break down through, which happens to be just about 39.50-ish, it would be about the bottom of the trading range that we have for TAN. That is something that should we push down through that we could see a much lower price for solar stocks in general. So the two could happen to have like an interplay off of each other. So TAN's drop could be more of the sentiment, and then it would also take the solar stocks with them. Or if we have a sentiment pick up significantly for those solar stocks, it could also be something that positively impacts TAN. We're going to have to watch and see what happens with it. But I don't know that the time in the sun is right now based on the sell that we currently have for Enphase and the technicals. I do believe that we're going to have some significant bullishness from here. In the pre-market hours, by the way, back up to 104. So it is possible that at month's end, because we're not quite there yet, and this is a monthly chart, that this goes from that bearish engulfing candle, that maybe we come back up a little bit. It'd be nice to see it come back up at least to about 110 or so, up a little bit more. Tesla's really on a tear lately and hasn't quite gotten to 200 yet. Right now, this is the daily chart that we're looking at, and it looks like the high price, let me put it back over there. My lines aren't over at 197.76. Haven't quite gotten to 198. We peaked back here over on the 29th of April at 198.87, so almost made 199. Still shying away from that 200 level, and we could see some softness for that. And I do think we could potentially see a sell down in Tesla price because of the deliveries that come out on July 2nd. Maybe we go strong into the weekend, and then July 1st, we'll happen to see if that where it comes in. Maybe it's July 2nd when those deliveries are announced. For quarterly deliveries, I should say, for Tesla, I think that's going to be a big moment to watch for. Now, what about the technicals on here? Well, by moving averages, the only thing that's really looking bearish right now is that we're down below the 200-day, which is up around 207. So should we happen to trade up in Tesla over the next couple of days, 200 is going to be very significant psychological resistance for us. 207 is technical resistance. And to the upside from there, got to shrink this down for a moment, that could put us up in the 220s to 230s, depending on whenever we get there, leading up to their earnings. We're going to have to see what sort of commentary we get for the earnings. And earnings have not necessarily been a spectacular time for Tesla. This last time that we got earnings, man, things just really popped off the bottom that we had right around that 140 level or so. And the monthly chart for Tesla is also something that's very interesting to look at. Not like that, though. That just looks weird. Here we go. We have this consolidating pattern for Tesla on the monthly chart. And you can see we sold right down to the trend line, confirming the trend line as we got the third touch there. You can see what the top of that looks like. That's very significant resistance for us. And if we really want to know a breakout moment over a long-term horizon for Tesla, it's breaking out of this consolidating pattern that's going to show us. So if we can get back out of this, that's going to be incredible for us for bullishness. And especially that 50-month measure that we have here could really help us out. Now, in terms of what else we see on here, let me turn on VWAP because that's for intraday. There we go. And then what we have is this 5 period, which is down below the 13 period, and the 50 EMA is right there. So we could happen to have some significant resistance right now, but should we push up above that, 225 looks to be about the current peak, 225, 228, somewhere around in there for where we could peak out for Tesla in the near term over the next several months. If we do happen to continue to the upside, if we head back down south 150s, it looks to be about the limit of where we get that again over the next several months. So we'll see where Tesla happens to put us. Like I said, a lot of speculation right now, a lot of positivity going for it. Not necessarily within EVs itself, although it is doing all right as far as EVs go. It's still top dog that's out there in the field right now in the industry. And companies are absolutely sweating it with their own EVs that are out there as well. And for Tesla, it's more the AI side of things, more the licensing of full self-driving. We also have on August 8th, the FSD day coming out for us. And then also right now, that brings along with the talk of robo-taxis, and then also Optimus Robot is something else to keep in mind. NVIDIA, looking at the 30-minute chart here, just to see some near-term levels of interest that we have for NVIDIA. And what we have right now is that we have a little bit of an inverse head and shoulders look on this on the 30-minute chart. So right there would be what we have. And then if we had a neckline on here, let me snag a line segment for this one, and we'll put it on there. So let go of the shift key. Looks like we could hit around 128 or so and see if we get rejected on this, or to see if we push up above that 128 level. So I wouldn't be surprised in the near term to see a little bit more. You can see some fibs that I have on here, some Fibonacci's retracements on this, and you can see where I put in support, great support, excellent support, load zone all the way down at 94, and then a major load zone going down to about $81 per share. That'd be a longer term look. So let me actually go out to the weekly chart. And this is wow, this is a crazy chart to look at when you talk about NVIDIA. And you can see we actually had a bit of a rising wedge pattern going. We fell out of it, so that bearish move already happened for us. And we are also in a broadening wedge pattern right now. And so if we come down on that, down to about 100 or so, that would be the next area for a significant bounce for us. And the major load zone, the load zone and major load zone would be anything $100 per share. I think it would be absolutely incredible opportunity-wise for NVIDIA. And something I want to remind you of, when this thing peaked out at $140 per share, prior to earnings, it was under $1,000 per share. And so went up to over $1,000, so we'll just call it $1,000, and then it went up another 40% beyond that. That means its market cap pushed up by 40% beyond that $1,000. So this thing put on 40 to 50% of market cap overall from just before earnings until after earnings had taken place. And now it's pulling back a little bit. It's retreating a little bit. And I think that that would be a very understandable thing to happen. And so I started dollar cost averaging now that we started getting back around that 125 level, and very small, tiny amounts right now. And like I said, I have my load zones labeled on here for you that you can see where those load zones are going to happen to play out for us. So we'll see. Moving on from NVIDIA to our friend Dollar Tree. So Dollar Tree is having a rough go of things right now, and it's possible that we do continue to push down further from here. We're looking at the monthly chart. We're bearish on the monthly chart for Dollar Tree, but I do think this is one that is going to find some decent support for us once it finishes selling off. And you can see this historic support line that we have coming along here. And then for Dollar Tree, where else does it find support? Around $85 per share, I think, is where we find that significant load zone for Dollar Tree. I think that's important to watch. Let me toss that mark out there. There we go. So should we break down through this? And it's possible that we do. The last time that we did solidly, by the way, it took the pandemic in order to do it. And that pushed us all the way down to about $61 per share. And then it had a nice, decent sell-off around September 2021. And that one took us all the way down to a low of about 84.26 is where we have that. And you can see we have all sorts of resistance back here. And then we wiggled around here for support, resist, danced along it before popping back up. And so we'll see that if we sell down beyond that 104-ish value that we're at right now, and it is possible that we take that bounce, I do think that for me, and I can only speak for me, I can't speak for you, Dollar Tree is one that I think is going to have some of that safer outperformance potential to it, and we're going to have to see if it's able to turn things around for its stores. And I do think that they're going to, especially if the consumers are really starting to get pinched and are looking for value type deals. I think there's going to be a bigger push to finding stores that can offer it, and I think Dollar Tree is one of those ones that is able to do that. All right, another stock that I have for you, Starbucks. Look at this head and shoulders, this absolutely massive head and shoulders pattern for Starbucks past their earnings. This is the weekly chart that we're looking at here, by the way. About $71, $72 where this thing sold down to before bouncing again. And we still haven't quite cleared this trend line that we have. Let me click on this and I'll click on that. And let me see. Let's move that a little bit. It looks like right there. That's the trend line that we would have to get over in order to see some further upside. If we fail to break through that, we're going to retest the neckline of this thing, and breaking down through that neckline is where we're going to see that confirmation of a further sell. I will say Starbucks has been significantly de-risked, and they're actually starting to put some deals out there to push some traffic into their stores. And they went away for a while for the pandemic. I remember my wife and I, when we had started dating, were using the whole buy one, get one free like Tuesdays or Thursdays or something like that. And, you know, that actually kept us going. And when those deals went away, we stopped going to Starbucks altogether. And drinks also started getting wildly too expensive. So I think that if they're a little bit more creative with their marketing, if they're a little bit more seemingly generous, we'll call it, I think that's something that can really drive the business back into Starbucks. This is one that it's not necessarily that deal place that you find Dollar Tree in terms of going to shop for a bargain, because I don't think that Starbucks is bargain coffee. I think it's premium coffee, but I do think that if they have some deals that look attractive to people, it will push that value back in and it will bring traffic back to their stores. So Starbucks is another one that I think is going to wildly return over the next 12 months, we'll say. So that's also another one that I'm looking at. Now, the last bonus that I have for you is TDOC. This one is going to be all over the place, but the reason that I have TDOC on here, now, first of all, we're in a descending wedge pattern, so technically it looks good. We also have what looks like an inverse head and shoulders taking place on here. So we have shoulder, head, shoulder on this one, and then the neckline that we have going on. It looks like we got rejected at the open on this thing. The neckline is right at about 10.19, so the market's currently active right now. The market's open. It's about 9:40 as of my time of recording right now. But this is one, if you're looking for a high-risk play, something really to find out where that value comes in. This one, let's go away from the 2-hour chart. Let's go out to the monthly chart on TDOC, because you can see what the pandemic brought to it. And this, I don't think we get the pandemic-type results from this, where it's going to go up to over $300 per share. I don't think it's going to 30x on us from here. But I do think that that with the way healthcare is going and insurance is going, I think that it's possible that we start to get a larger return on TDOC, that we actually start to see some traffic being driven to TDOC. Let me move this out here for you so you can see that bottom trend line that we have. And that, let me get rid of that. So there's a much better look at what we have going on. We'll get rid of this one too. There we go. So you can see the falling wedge pattern that we're on, that we're down at near support right now for TDOC. So we'll see what July happens to bring for us. Now, the one thing that I like about TDOC, even though it's like I said, a very high risk, it's not necessarily the play that's it's not safer where it's going to return to its investors. There's no dividend. I don't even think it's profitable right now, but I do think that there's going to be a push for TDOC services. And just as an example for why I think that there's going to be a push for it, right now when we take our daughters to the hospital for any sort of checkup or anything like that, or if it's urgent care, for example, we now get 2 bills, not one. We get a bill from the hospital, that these are the hospital charges, and we also get a bill that are the doctor's charges from the hospital. Like, it's absolutely insane. Not only is the cost of healthcare going up, and likely the cost of healthcare will keep going up, but then that's going to push us into seeking that sort of alternatives there. And for TDOC, the school that I work for, because I am a mathematics teacher, the school that I work for has recently talked about, rather than going to urgent care, you can call up through the one program that we have. And who are you calling out to? You're calling out to TeleDoc, and you can talk to a doctor. You can describe your symptoms, all that kind of stuff. And the fact that we have taken on that partnership, it could be a sign, just in a small view, of broadening. Now, that is anecdotal, is not research, so that's also something to take with a grain of salt, but it is something I put more of my time and emphasis into for TeleDoc, to find out if more people are moving that way, because it's something that could be funded by employers, and then it also is something that significantly reduces the cost, and it's also more convenience that you would have. So it'd be a little bit more of what we had during the pandemic, at least as far as convenience, but without that sort of pressure that we have of social distancing, where you can't, in lockdowns where you can't go anywhere. So those are just some thoughts that I have on TeleDoc. So just to wrap things up for this entire video, could the markets go higher? Absolutely. Are we near a top? Most likely, at least at the top of the trends that I'm seeing right now, that we could still see that 4 to 5% upside in the S&P and in the NASDAQ 100 during the first 2 weeks of July. The technicals suggest that, history suggests that, but being on the top trend line, it is understandable if we also do have weakness in July instead. But like I said, we'll see what the first 2 weeks bring us. We'll see if history does repeat itself, because it's still very likely that it could repeat itself. And like I said, the technicals are there to support it. The technicals are also there at this point in time to make it understandable if we do see a little bit of softness come into the markets as well. So should you be excited for a pop? Well, it could most definitely be there. I'm pretty excited at the potential of it. Should you be worried if there's some sort of drop for right now? Not unless we drop outside of those rising wedge patterns that I showed you for the overall markets. For solar, I want to watch and see what happens. If we keep on barcoding, well, we really need to see what's happening with housing market, what's happening with the Fed funds rate, the interest rates, all that kind of stuff. And the guidance that we get coming out of solar is going to be absolutely massive as well to pay attention to. Guys, thank you very much for watching. If you want to hear more of my commentary, check out my Patreon. That link is down in the description. Go over to the Discord that's available through there. Sign on up and see my buys and sells, and also talk to me and my community members over there. And then also down in the description, you can find a link to a technical analysis trading course where you can learn to take your technical analysis trading to the next level to really help out and empower your portfolio. As always, guys, I really do appreciate it. Thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.